Mike, is that what you're seeing in the marketplace? A rise in business confidence and therefore an appetite for more and more deals?
Yes. Now, Steve Schwarzman is right at the nexus of all of this stuff going on in M&A. But in addition, yesterday we had some numbers come out that announced buybacks by corporations post the tax announcement is at a record level. So companies are not only buying their own shares, but they're buying, as Steve Schwarzman says, other companies.
I was actually in a debate yesterday, a pretty heated debate about how good or bad share buybacks are for the economy and whether, frankly, companies are buying back their shares at peak valuations right now. Is this a bad deal? What's your take on that? Do you think this is prudent?
I've never been a fan, Lisa, of stock buybacks, even though I'm a shareholder and I understand the beneficial effects of that. I'm always interested in their building the businesses and paying me cash dividends. I'm really big on those. But all things being considered, if there's nothing else they can do that's better than that, as we're talking about Qualcomm, we actually have managements and boards saying the shares are still okay. Now, the record isn't real good in terms of their buyback. I mean, they usually buy high and sell low.
So, Stephen, what about in a broader sense across the economy? Is there any indication of whether share buybacks really help businesses, help the economy, or hurt it on the other side? I mean, because let's be frank, when you're buying back your shares, it means you're making your business smaller. You don't have enough ideas to invest in your own business.
Well, yeah. I mean, I think ideally from a macroeconomic standpoint, you'd much rather see a business going out and doing capital investment or expanding their business or whatnot. But at the end of the day, you want to think about the process, the economy is in a process of making sure that the marginal investment funds get to the right place. Right. So if a company doesn't have good investment prospects, they give the money back to the shareholder. The shareholder can put it into something else, some other company that does have better prospects.
And I think it's really Apple, to Steve's point. Apple does all of this, and it buys back a lot of stock, gives cash to so it's a great example of a company continuing to grow the business and doing this as part of its plan.